Thank you so much, Lucas, and really glad to see so many participants and so many good stories, shared by the earlier, speakers. So I think just to kind of, set stage for the panel discussion, I just wanted to quickly highlight, when it comes to automation or digitization of SME journeys, right? What are the typical areas? What are the expectations from the SMEs? Uh, uh, you know, what what have some of the banks, or what is the requirements the banks needs to fulfill. And then also essentially I want to give you a very small snapshot view of some of the automations we have done as well in this space. So as we speak, we have been working with hundreds and hundreds of customers for automating some of these SME journeys. So I wanted to give you that quick flavor, and without taking away too much time from the panel discussion. So I think very quickly, just in terms of what were the top three expectations, and this is based on a report published by McKinsey. Uh, you know, what are the top three expectations from of SMEs from some of the banks, right? And if you see, one, obviously every SME bank, every SME wants that the credit journeys, or it should be as easy as seamless for them to get credit from these banks. And I think we heard some great stories of how those journeys are being made easy by banks like Rabobank, Pasha Bank, and Banco Santander. um, Secondly, I think while client onboarding and closing the customer loans is very important, I think essentially customer experience doesn't just stop at the client onboarding or closing stage, right? It essentially also continues throughout the relationship you maintain with your SME customer. So what we also saw that the second expectation is, if there's a distress in the SME, there's a requirement for waiving of the fees or waiving of the loan payments for a certain period of time. Mortgages, obviously, in the we are living in the COVID era, so there are a lot of moratoriums which were rolled out by the government. So waiver of fees requests. And then lastly, again, due to this distress, we are also seeing there are a lot of restructuring, loan lending restructuring requests, payment restructuring requests, which are also done by SME. So have you made all of these journeys seamless is also what decides how good your SME journeys and your relationship with your customers are end to end. Now, what does it mean for banks and financial institutions? Obviously, I think we have heard a lot on the first pillar, where banks want to make their application process streamlined, the customer onboarding times faster, and the whole fraud detection process as seamless as possible. Essentially, I think this is another big channel where SMEs expect that the waiver request, the fulfillment of some of these requests is also done in a very timely manner. And then also, I think it becomes very important for some of these banks to also take some proactive loss mitigation steps to identify defaults. Obviously, there's bound to be an increase in the percentage of defaults as well. So how are you managing your loss mitigation journeys as well is also very important, right? So I just wanted to give you a very quick view on how we have been helping, and then like I said, we'll jump into the panel. So essentially, the first piece is how you can manage or streamline the whole application onboarding process for an SME. It starts in a lot of cases, in a lot of countries, it still starts with a lot of documents. So how can you handle that, structured, unstructured documents? How you can, again, there are varied types of documents in some markets. So how do you handle all of those documents? Then how do you validate information, do all the checks which are required? And then lastly, how do you onboard those customers onto your in-house applications, right? And then maybe notify the customer, or if there's any other notification which needs to be done, right? So again, a quick snapshot. We did this for a lot of customers almost in less than 6 to 8 weeks of time. We were able to bring down the overall processing time down from 45 minutes to 2 to 3 minutes per loan for some of our SME, customers. So that's one journey I wanted to start with. Fraud detection is another area where I think across the whole lending life cycle, you have to obviously identify if there are any fraudulent applications. It could be, fraudulent owners, or it could be a fraudulent entity applying for the loan. So how are you um, finding out those fraudulent entities, identities? I think we have both rule-based and ML-based models to do those fraud-related classifications as well. Without going detailed into the journey, I think essentially there's a part which is very, very rule-based in checking some of the documents, the ID documents, the credit verifications and profile verifications of the customer and the entity itself. And then there's certain historical data which is available with the bank, which can be used to train your fraud prediction models as well, right? So that's the second capability or second type of fraud check, which can be also created very, very easily using some of the capabilities. Then I think the second pillar, which I was essentially talking about, managing some of the moratorium request or payment deferral request. Now, I also want to talk about one important piece here is managing increased volumes, right? So when so this is a UK case study, UK bank case study. So when the UK government came out with this, mortgage holidays, there was a 30x increase in the amount of requests received by the bank, and I think they were relying on UiPath. Almost 100 plus UiPath robots were able to help them in managing all these increased volumes or surge in volumes of the deferral requests, mortgage holiday requests coming to the bank. And then lastly, I just wanted to take a minute to quickly talk about the whole loss mitigation life cycle. Now, when we talk about loss mitigation, again, like I said, this is a time when it becomes very important for banks not just to manage the client onboarding or client closing journeys. It also becomes very important to also manage your loss mitigation journeys as well, right? How uh, you know accurately you can predict loss mitigation, and then what are the actions you take after getting those predictions from the models. So one, I think obviously we have ML based capabilities which allow you to create those prediction models, which will obviously one give you a prediction, second also assign a priority score based on the prediction, a high, medium, low in terms of default probability of a customer. And then I think after that, there's a next set of action. Either it could be a collections or a payment restructuring or just a notification to the customer basis on the default predictions. So I think this is where you will see the complete power of combination of technologies, starting with ML based predictions to integrations where you integrate with things like some SMS notification systems, some email systems, or maybe some of your underlying collection system as well to manage some of the reach out, to manage the notification or reach out process to your customers. And then also, I think it just doesn't stop there. Obviously, you receive response back from your customers. Then how do you capture those responses in an automated way, and then also take an action based on the response from your customers is essentially what defines how good your loss mitigation journeys are. So I think these are the quick 3-4 journeys I wanted to highlight, where we have been operating with a lot of SME lending organizations across client onboarding, restructuring, and loss mitigation journeys. I think with that, we can jump quickly into the panel discussion, unless there are any questions. All right, I think let's get into this panel discussion now. And I just before we start, I think you will find, uh, if you are interested to hear or discuss some of these areas in more details, I think my colleague Dirk has posted on the chat window how you can reach out to us. So please feel free to click on those links and reach out to us. With that, I think let's get started with this panel discussion. And like I said, I'm very glad to sit besides all of these eminent speakers today. Um, so let me actually start, Aisel, I think with you. I think I was listening closely to your journey in Pasha Bank and really glad to hear that you are able to close loans in less than 30 minutes. That's surely not a simple feat to achieve. So can you, tell us a little bit in more details? What have you done differently from some of the other organizations? You said this is the first time in your region that any bank is doing this. What did you do differently to bring down this loan closure timeline? And did you saw automation playing any role in that?
Thank you very much, Nitin. So yes, we have done differently the approach. As I mentioned, we didn't look to digitalize the existing journey. We wanted to create totally new journey for our clients. That's why all the bottlenecks that we were having in traditional lending, we didn't accept those bottlenecks. We said like, okay, it's digital. We should change ourselves, our approach towards the client. That's why we could achieve the minimum time to money. But also the automation of the redundant processes is also part of it. Whenever there are human interaction in the process, of course, it takes longer. That's why I during my presentation, presented two averages. One, the minimum time, the other one was the average. Whenever there is more documents, let's say, to validate or any human interaction, it was taking longer. But whenever it's our client, it's Pasha Bank client, we could optimize this time and remove all the impediments, human-related impediments through automation and decrease the time to money to 30 minutes.
That is so awesome, and glad to hear that you were able to reduce so many manual interventions or gaps using automation. Thank you so much, Aisel. Next, let me come to Jack. And Jack, big fan of Rabobank. I know you guys have done some real wonders with automation. I have been talking to a lot of the colleagues. So again, congratulations on your journey, and really glad to hear your journey as well. I think, when we talk about digitization and automation, I think an important pillar is essentially people pillar, right? How do you manage people? At UiPath, I think we have a lot of examples where we have worked with customers where before automating a journey, we also look at enabling and upskilling the existing workforce and personas, right? Like underwriters and front office agent and risk teams, right? I think you mentioned that as part of your digitization journey, you also had to experience or manage some of these people-related aspects of digitization. So could you share some of your experience of, how were you able to manage or, upskill or, enable some of the existing workforce across the journeys?
Yes, of course. Thank you very much. It's a good question. I think digitalizing a process is quite easy. It's not easy, but it's you can do it with a team, with IT experts, with forward-looking people who are really willing to change and implement a new process. But on the other hand, as an incumbent bank, as Rabobank, we have a lot of account managers, for example, working in the local branches who are used to visiting the customer, who are used to do a lot of talking with customers before actually a lending process starts. So what we did from the beginning is we tried to onboard the account managers as soon as possible. That we wanted to change this journey, that we explained why we needed to change this journey, and where we have shared a lot of the customer needs and the customer wants, and that the customers really wants to change also this process. And of course, it's quite challenging if you're an account manager and working in a small town in a local branch within Rabobank, to see that maybe you can be changed for a digital process. So what we try to do is to onboard the people as soon as possible on the changes that we wanted to make. And what we actually did, what I also shared in my presentation, is we digitalized the process, but there's always a human component. So we always want to have the opportunity for customers to have a call or a video chat, or also a face-to-face visit if the customers really wants to. So we shared a lot with our people that they are not redundant, that actually the role will change a lot. So a lot of the account managers who were previously in the local branches are now working, for example, in our customer success center, who are helping customers via video chat, for example. But we also still do have people working from the local banks, visiting customers. And actually also we freed up a lot of time with the local account managers to do acquisition, to actually sell the digital journey that we have to our customers. So they visit a lot of prospects and help them to onboard on the digital journey. So that's what we try to do, is we try to onboard them as soon as possible and make them part of the change, instead of implementing a digital process and saying, guys, sorry, something has changed for you.
Yeah.
That's also for the commercial people, but also, of course, with credit people, with legal, with risk compliance. It's very important that you onboard forward-looking people also within those departments. And yes, there are forward-looking people also within credit risk and compliance, to work on these kinds of processes and new ways of working. So start early with involving as much people as possible.
Yes, absolutely. Thank you so much, Jack, and totally agree with you. I think you have to make sure all stakeholders or people are engaged early on, and as much as upskilling and digital enablement can be done, always helps. Thank you so much for that. Anna, coming to you, and again, I was hearing to your PhD to integration story. Really glad to see all of that. I think you spoke a lot about data. You spoke a lot about documents, right? And how do you manage that? And again, I understand documents and data are intrinsic part of any lending journey. What are some of the challenges, right? When you manage unstructured data, right? Not structured data, unstructured data, which you receive as part of some of these lending journeys. And how do you manage some of those challenges around unstructured data? And obviously, any role for automation to play in that handling of unstructured data.
Yeah, okay. We are trying to traduce everything in structured data because, risk models are really mathematical models. So they need specific variables, KPIs, and so on. But for that reason, we try to avoid to ask our customers for specific balance sheets because they can have a lot of variability in the input of the data, of the models, okay? We prefer to ask them for the identification of the document and try to ask directly through the consents, of course, to the administration, public administration, tax administration, and so on. Anyway, we have to deal with unstructured data. On top of when we retrieve description for transactions for other banks, okay? Not every bank are describing the transaction in the same way. Sometimes you have a lot of information. Sometimes you have very few information for that. So we are using machine learning in order to identify specific behavioral models and try to explore what kind of transactions are going to categorize, okay? So it's a combination of trying to avoid non-structured data in any way, and then use machine learning or algorithms to fill the gap in that way.
Awesome. That's great to hear. I think totally agree. Classification and categorization using machine learning models is a good way to handle some of that unstructured data. Thank you so much, Anna. My last question, and I would actually let any of you pick that one. I think when we talk about some of these SME journeys, right, capability to scale fast and manage volumes. Obviously, you have peaks and troughs of volumes, SME applications you receive. How do you make your journeys agile and flexible enough to manage those surge in volumes without maybe necessarily adding heads to your journeys, because that's the last thing you want to do, just to manage certain periodic surge to add heads. So how do you manage that scale and surge of volumes? Anyone?
Well, if I can answer to that, we run very fast learning circles. We call it PDCA cycles: plan, do, act, plan, do, control, act. So we are measuring a lot the inflow of new applications from loans. And as you can imagine, if you have a large market share, as we do in the Netherlands, the volumes can peak a lot, especially what we see, for example, in the campaign that we are doing now, that we have a lot of extra incoming applications. So we are trying to estimate as good as possible how much applications we receive. And what we try to do is to keep on digitalizing as much as possible in the journey. Yeah? So all the manual checks that we need to do, we try to learn a lot from the data that we receive and all the applications that we processed, how we can actually convince also our risk people within Rabobank that some manual checks should be abolished. So we are working a lot on digitalizing much more and trying to make the processes a lot faster, so that we can do much more applications with the same amount of people that we've placed on this journey so far. So we every 2 weeks we measure with a large team the number of applications, and we see if we are ready for the next 2 weeks to process all the applications that are coming in. And of course, there the key word is digitalization. If you can digitalize as much as possible, then you can scale faster than when you need to hire new people and educate them. And so digitalization is of course key.
Absolutely. Thank you so much, Jack. Yes, digitalization, adding digital workers is the key to managing search. Thank you so much for that. I think, Lucas, is there time for one more question, or are we out of time?
There is obviously still time for one additional question if you have. I see one actually in the chat. If you prefer, we can ask that one, or if you...
Yeah, let's go ahead with the question in the chat if you want to do that.
Yeah, so there's a question to all the panelists. How do you handle a digitally complicated product like mortgages, investment loans in your institution, with the process? Anyone who would like to pick that question or probably just answer it?
I can actually chime in. Yeah. I'm an ex-banker, so don't mind me answering this question. So I think essentially when it comes to handling some of these complex products, what I have seen essentially is building some of those models, right? I think Anna mentioned about that, Jack mentioned about digitization, right? So one, there is obviously going to be a part of any complex journey which is going to be rule-based, repetitive, which you can digitize and automate. And then there are going to be certain outliers and exception or complex scenarios in any journey which you need to handle, for which you will have to train either certain ML based models. So I can actually give an example from a mortgage perspective. We are working with a lot of mortgage customers where we are working with our customers to create data extractors for complex mortgage documents, right? And essentially we have built like a repository of 30 to 50 high volume complex mortgage documents. And essentially that is how we are helping in managing some of these complex journeys. So I think essentially it's about bifurcating the rule-based and the cognitive part of the journeys, and then essentially tackling those journeys. Sorry, Jack, Anna, I think you wanted to add something as well.
Well, first of all, I think you should decomplexify your product portfolio as much as possible. So try to stop with all the complex stuff. So customers don't ask for complex loans. They don't ask for complex constructions. SME customers want to have a loan and they want to have it as soon as possible. So make it as least complex as possible. Furthermore, also in the collaterals, there's a lot of old-fashioned stuff within existing banks. For example, the personal bails. For example, if you need to ask for a personal bail, if you give a loan to a legal entity, you should wonder in how many cases the bail actually delivers money if the customer goes bankrupt in the end. So I think you should challenge a lot the existing product portfolio. You should rationalize a lot the existing product portfolio, but also rationalize the collateral portfolio, what you ask to customers. So also there you need to think forward-looking. I think what kind of collaterals do you really need to grant a loan to a customer, and try to rationalize it as much as possible. That would be my answer.
Anna, Aisel, anything you want to add probably to this question, or anything you want to comment, probably any messages you want to share?
I actually totally agree with Jack that the clients need only the poor journey. They need the cash. So the main purpose for the banks should be to providing it, not showing the complex part of the product to the client, but better to keep it on the automated automation, or let's say in the back to make manual verifications, and then it will be easier for the client to understand their needs as well and to request the amount that they can actually pay. So not affecting the PD or LGD.
Thank you. Anna?
Yeah, it's more or less the same for me. I think we have to avoid the friction points of the customer. I think a very friction point is for the customer is a customer signature. We need to find out new ways of digital signature. I hope in the digital identity in the next years. I think it's a very challenging point that the European authorities are facing. And I think a digital identity would be a really a disruption for all processes and to keep them frictionless. And also for us, another friction point is the need to go to the notary for some amounts. Okay, if the amount of money is not so big, you can do it everything digital. But for a mortgage or something like that, depending on the amount, sometimes it's necessary to have a physical signature. Okay, I think that are challenges that we as a bank and the European legislation has to face in order to avoid friction in the process, both mortgages, lending, and so on.
And I guess we have as well Ken, who might share some of the highlights, key findings, or something to point out from today's session.
Yeah, just to close out that specific question there in relation to more complex credit journeys in relation to mortgages, and Philippe mentioned at the start that AIB Bank had an award-winning digital mortgage product, and that was quite a journey. And I suppose take the word journey because understanding the customer journey and the customer expectations is really important. So when you get into a complex journey like a mortgage journey, what the customer wants to know is, will I get the loan and how much can I borrow? And then can I get an approval? So the disbursement of the funds and the complexities around those legal manifestations come after the event. So the way AIB worked is that we provided a very quick approval in principle based upon self-certification of customer information by the customer, and then verified that after the event using the customer to scan and to upload documentation at that stage where there was a level of human verification. But it allowed the customer to have a document, an approval in principle that they could scan or print off at their home that they could go and use to bring to the estate agent auctioneer to validate that particular purchase. Now, since then, that journey has been refined, that it is a truly digital journey, and the road to full underwriting and digital underwriting is well advanced. But I think it's that unpicking of the customer journey to say, well, what are the friction points? What are the pain points? And what does the customer expect you to deliver at what point? And how can you make that seamless or frictionless for the customer? And if you start from that position of that understanding from a customer perspective, I think it puts you in better store, if that makes sense.